Welcome to the channel, guys. With trading plan for the upcoming week, let's dive into fundamentals first. Last week delivered a confusing blend of economic data, adding uncertainty to the market's fundamental outlook. Despite disappointing JOLTS openings and GDP figures, which suggested slowing growth, the ADP non-farm payroll surprised with a positive reading. This was compounded by a higher-than-expected core PCE index, indicating persistent inflation pressures, alongside reduced unemployment claims. The key shock, however, was a miss in the NFP report, possibly impacted by events like the Boeing strike, hurricane disruptions. On geopolitical front, a rumored geopolitical shift with Iran allegedly striking Iraq in response to Israeli aerial activity created further confusion and uncertainty. Looking ahead, this week is set to be highly volatile, driven by two significant factors. U.S. elections, the presidential and congressional races are expected to be highly contested, particularly in swing states, with a close outcome potentially leading to legal battles that may prolong uncertainty. FOMC, the Fed's decision is unpredictable, as it may either maintain an aggressive rate cut approach or take a more cautious stance in light of mixed economic data and market conditions. These events are likely to trigger major volatility across asset classes, keeping market participants on edge. Retail traders face a tough decision this week. With potential for extreme swings, it may be wise for many to stay on the sidelines. For those willing to risk, the stakes are high. Gold expected to remain strong due to geopolitical tensions, the uncertain U.S. election outcome, and a possible dollar dip following election results, depending on the winning candidate, however, can make a nosedive anytime if the situation flips. Silver may face downward pressure, as Chinese economic stimulus efforts are still lagging in impact. Crude oil, exhausted bears could give way to bulls as demand, driven by supply concerns if geopolitical tensions in oil-producing regions escalate further. Here is the weekly trading plan. This week presents a high volatility landscape with major events, including the U.S. elections and the FOMC meeting. While cautious trading is advised, here are some strategic moves for those willing to engage with strict risk management. Safe haven assets, U.S. 10 years and dollar index strategy. Consider long positions on the U.S. 10-year Treasury yield and dollar index, either outright or on dips. Rationale: uncertainty around the U.S. elections and FOMC decision may drive investors to safe havens, supporting both Treasury yields and the dollar. Forex pairs, Euro and Cable Euro, look for short opportunities, possibly selling on strength. Expect further downside as investors lean toward safe haven USD. Cable, similar to Euro, short positions may be favorable, however, the downside could be limited due to strong support levels. Consider switching to long positions on dips if initial short targets are met, as cable's support may create a rebound opportunity. Japanese yen, ninja strategy, approach USD JPY shorts cautiously, despite general dollar strength. Rationale: the Japanese yen is another safe haven, and its stability may limit the upside for USD JPY shorts. Precious metals, gold and silver. Gold, initial bids may push gold higher, but strong dollar movements and anticipated FOMC hawkishness could weigh heavily on gold. Shorting on strength might be safer than buying on dips. Silver, similar to gold, silver may attract early bids. However, a stronger dollar and potential Fed hawks may limit its upward momentum. Crude oil strategy, watch for buying opportunities, particularly if prices dip to mid-60s support. Rationale: geopolitical tensions among oil-producing nations may bolster crude oil prices. Bears appear to be losing momentum, and recent bounces from support levels look promising for further gains. Cryptocurrencies, Bitcoin and Ethereum strategy, expect extreme volatility, especially given the divergent stances of candidates in the U.S. presidential race. Pro-crypto sentiment associated with Trump versus a less crypto-friendly stance from Harris may drive unpredictable moves. This week requires conservative risk management, with tight stop-loss orders and careful position sizing due to potential swings in response to geopolitical and economic events. Thanks for watching, and I hope you follow my trading plan and earn handsome profits. If so, do not keep it to yourself and like, subscribe and share for the greater benefit of trading community at large.